In this video, I want to recap and review some of my recent trading setups. I want to go over my thought process. We're going to go into the journal. I'm going to show you exactly why I entered, where I exited, where my stop losses were, where my targets were, and just the overall thought process so we can get a better understanding of what I did right, what I did wrong, and use these lessons to get better and expect different things for trades that we may take in the future. I'm confident these recaps are going to help. Before we get into it, I'm going to post a link in the description below for my Instagram. I definitely recommend everyone watching this to follow me on there at Trade. I post daily trading recaps along with very good trading tips and tricks that I guarantee you're not going to find anywhere else. The link will be in the description below. You're missing out if you're not following it. But now let's get right into these charts. First setup I want to get into is on the NASDAQ, and I'm going to consider this a wash type of trade because I did not follow my plan. I didn't sell at my target, and I basically was expecting something to happen, and I reacted to based on what I wanted to see and not what the market's giving me, and that's not appropriate in trading. So very small profit on this setup. It was a simple analysis. And to get our levels, I'm going to go over the pre-market plan. I post these every single day in my Discord, setups I'm watching, levels I'm looking out for, and potential trading scenarios. So we had this green line over here at 10912, which was a demand zone. And we also had support at 10890 that the day prior, we bounced off of this level pretty perfectly. So the bullish scenario was if we could hold these levels and start moving higher, we're going to look to take the market long. And the bearish plan was if this 10890 white line, if that level of support breaks, I'm going to be looking to play the market short, targeting the demand zone at 10812, which is the zone a little lower than that. This is how I've been taking a lot of my high quality, really good setups recently. Is I've been waiting for some type of key level, support, resistance, maybe supply or demand, those levels to break, and then using the next demand or supply zone below or above as a target to my price, saying, okay, we're below support, there's nothing stopping a sell-off for the market to sell off back into the demand zone lower. On top of this, the market is making lower lows and lower highs on a higher time frame chart. When the higher time frame meets the lower time frame, this is when you're going to get better, clearer, and more fluent type of setups. So now the market opens up and we get an immediate push, and then we get that move lower, breaking below this support level. Now I didn't play it as soon as we broke below support. It's just not how I trade. I don't normally like getting in as soon as we break below a level. I want to see how the market reacts to that level, and if we get a reaction from sellers, then I will be open to playing short if we could develop structure in the market. So then we started moving lower and we came back up and retested this level of support once it was broken. If support breaks and support becomes resistance, this is a clear indication that sellers are now into the market. So we broke below this demand zone, and now we're starting to see this type of structure right here where we have a previous high over here and now coming back into this level of old support, now resistance, and it is rejecting. So at the 947 candle, I played the NASDAQ short, reduced size due to the current market conditions, and my target was the demand zone all the way at 10812, which was the nearest demand zone over here down here. Now the problem with this setup and why I did not sell up at my target was because of this reason. So from a auction standpoint, the market kept breaking the lows, and every time we broke the lows, we failed to find consistent follow through. And every time we did break the lows, it was met with some type of consolidation or a quick little relief bounce. So I got in short here. I saw this little relief bounce as the market came up. And in hindsight, we broke below this support level and it actually acted as resistance. Then the market came back down, broke this previous low. And then the following candle was starting to move back up. And this is when I exited my full position because I did not like the action I was seeing. I was seeing lower lows, seeing lower highs. However, I did not like every time we broke the low, it was not met with continuous selling. Every single time we broke the low, it was met with a relief bounce. Exactly my point. It was like a roller coaster, up and down, up and down. And every single low at daybreak was met with not more aggressive selling. And this is why you always have to follow your plan, because the NASDAQ continued to sell off, hit this demand zone, and had a very, very strong rally. And this is going to bring me, and it's a very key point for my next setup, on the S&P 500. So on the S&P 500, I took the market long off of a demand zone. This was not a zone I was really watching or too cautious about before the market opened up because it was a very small imbalance. However, the lesson here is multiple confirmations line up. This is when you get a higher quality of a setup. Not only that, but sometimes you're going to be bullish, sometimes you're going to be bearish. Who cares? When the market says be bullish and when the market says be bearish, that's when you're bullish or bearish. Don't be bullish or bearish because you expect something to happen or the market to move in your way. So this setup on the S&P, I was not looking to take the market long before this. I thought we had more downside and it wasn't ready, in my opinion, to take it long. However, I got long the market with multiple confirmation factors giving me high conviction. So the market opened up, again, lower lows, lower highs. We're selling off into this 3585 demand zone. The zone that I was watching was a little lower at 3567. However, the market sold off into this demand zone. We consolidated and then we started moving back up. At the time this was happening, the NASDAQ was also doing the same exact thing. Now on voice chat yesterday in the Discord, when I was on voice chat, I was explaining how this VIX around 33 bucks and 32.80 is a vital level that the market is going to have a hard time, and the risk to reward wise for a short setup on the S&P 500 is going to be a little tougher. So VIX opened up, rallied right inside of the supply zone. If VIX gets a reversal here and starts moving lower, the odds of the S&P 500 rallying is even higher. And at 10:26, I said I'm liking the action here at 3587. This is when the market looked just like this. I said I'm liking the action here at 3587. I am in long. My stop loss is below the low. So this is what the chart looked like when I got in long. 3587, I longed this pullback. Got a very, very good entry. I like buying when others are selling. This target was a 3600 break. And then if a strong break above 3600, I'm going to target high a day. So what I liked here was the market broke the pre-market low. When everybody that first learns support resistance, all they do is mark pre-market highs, pre-market lows. So if we break below a low or above a high and it's not met with strong selling or strong buying, and there's a lot of trapped sellers there or a lot of trapped longs above the high, this is going to indicate that odds are in your favor for a possible reversal. The market moves when the most are in pain. So if everybody's selling this, thinking the market's going to keep going lower, making lower lows, making lower highs, not realizing we're inside a demand zone, volume was increasing, indicating more selling pressure to the downside. As the market starts moving up, these sellers are going to be in the most pain. Now, I have a live recording of what Bookmap looked like. So here's that 3587 demand zone. And as you could tell, as we were coming down into the zone, very large aggressive market sell orders as we were moving lower into the zone. Now, as soon as we hit the level and we consolidate, look at kind of the flip of the book. A lot of aggressive sellers. Now the market's coming up. Even when we come down, there's still a lot of aggressive market buys. We flip from being short bias to now long bias from all those confirmation factors that I just mentioned. And I wanted to get long 3587 on a pullback into this level, because if we draw a little rectangular box, this was basically a breakout of the structure and then a possible retest at some point in the future. Pulls back into this box. I'm going to hit play. And look what happens. Come back up, bounce off of this box. It is immediately met with more aggressive buying. Fast forward it even more. This little breakout of the structure, we pull back into it. We also get even a further pullback. So this trade didn't work out right away, but my stop loss was below the low. And then what I want you all to see here is look at the bids that step into the market, right here. A very large bid stepped into the market, right? 380 lot right there. More market aggressive buys come in. More bids stepping into the market as we move up. If the market is moving up, you want to see bids step in, and you also want to see strong market aggressive buys. So we formulated demand on a smaller microstructure time frame. We also bounced off of demand. We had VIX selling off from supply. We had NASDAQ bouncing off of demand. And we also had market leading equities showing signs of strength. So now I'm in long this trade. More very aggressive market buys. See how we kind of flip from earlier in the day being aggressive to the sell side. And now we're starting to be more aggressive to the long side. The market starts moving up and we get a strong break above 3,600. So going back to the Discord here, 3,600, I said this level is now key, and if I want to see more buying above it, the high a day is coming. So essentially what happens was, going back to TradeZella, I sold 60% of my position as soon as that we broke above 3,600 just to protect myself. I wasn't, wanted to get stuck in a pullback and more choppy consolidation. So as soon as 3,600 broke and everybody was buying this breakout, I got out 60% of my position to protect myself, and I boosted my stop loss higher. This is how you manage a trade. So what I did is I sold into strength, and now I boosted my stop loss so the trade can never ever go red on me, and I could hold runners in case the market wants to continue moving higher. So now the market's moving up, right? We get a pullback into 3,600, and this level holds. If we break above a level, now you want old support, old resistance to flip, and buyers or sellers to defend that level. The market pulled back into 3,600, held it, and very strong, more market aggressive buys out of that level. And then I sold my full position as soon as we broke the high at 3,615 into this strength. When I knew majority were going to be buying, I look at ways that I could sell position, and then I'm all out of the trade, 3,615. Awesome setup. Just understanding that multiple pieces of confirmation, it will give you more conviction in the setup, and react to what the market gives you. The market in the first few minutes was very, very bearish. Lower lows, lower highs, right? This demand zone was not a zone that I was watching, but it was an area that the market reacted off of. We broke pre-market lows. I looked back on the chart, and this did form a valid demand zone. Then we formed this little mini structure. We rally out of that. You don't have to take the first rally out of that. Maybe you miss it. You could play the retest like I did. I had put a limit order at 3,587, and I put a stop loss below 3,580. Here is that little microstructure. Selling into that level, we hit demand. Now we consolidate. We move out of that consolidation. We come back, retest it. This is where my limit order was. Stop loss below the low. And then we get a clean rally out of that. Bids step up. More market aggressive buy orders come through. And I could fast forward this little book map tape for you all. Look at the nice structure on the volume profile. We also, on that pullback, pulled back into a low volume area, and then just fast forwarding it, dips below 3,600, got bought up, aggressive market buys out of that level. You love to see that buying pressure. This is something you want to see if you are looking for continuation to the upside. Market completely uptrending all day, higher highs, higher lows, and I followed my plan. I can't look at, okay, the market came up, we hit supply, we broke above supply. I can't look at that. I got to look at, did I follow my plan? Did I execute? Did I sell when my stop loss triggered? Did I sell when my target hit? And did I follow my plan? And if I did, it's a win scenario. And when I make profit off of it, I can't look at how much I could have made if I held. What if the market reversed where I sold? And if I didn't sell there, anticipating that we were going to continue to drop, and we did drop, I would have been out on all that profit. So I can't look at where the market went. Amazon got filled 1/10 of my position. My full order did not get filled. I haven't traded these types of equities, especially in the first few minutes, often and frequently. But Amazon, we were watching this 112 demand. If we got below it, also lined up with support. We're going to be scalping this level to the puts, to the downside, if we could break it. And to give more conviction, Amazon below 112, the S&P below 3,600, and the NASDAQ below that white line at 10,890. Multiple confirmation factors gave this high conviction. So I hope this video helped. If it did, drop a like, comment if you have any questions. I'll go through the comments, subscribe to my channel, and check out the links in the description below. I offer a very in-depth educational course that comes with access to the Discord at no extra cost. But I'm ending it. Peace out.